Now, one shocker to me is Litecoin has underperformed. I expected
I
Litecoin, it
know.
started to go on a little move, but then it got hung up in that 230 area.
Yeah, I mean it's been a little disappointing to be honest, Litecoin. I was really hoping for it to do well. I'd done plenty of analysis on the coin. It's one of the originals. It's lasted a lot longer than a lot of coins, as well. It's been around since 2013, I believe. Um, the question is it just lagging? Is it just behind? Is it going to catch up, or is there just not that much demand? That's the question you have to ask.
So, yeah, it actually didn't get quite the move as it did last time. So maybe we'll see it get a little bit more bullish. This was a perfect U shape breakout there though over that
Yeah.
120 area.
Yeah, I mean it's a really nice move. It's really bullish, no matter how you look at it, whether it's a U shape or you can draw a triangle on the logarithmic scale, and it broke out of that really nicely.
Mm-hmm.
But another one's Terra Money or Luna,
Oh yeah, Luna.
part of like the Cosmos ecosystem. That was 28 cents in November, and it peaked out at
Yeah,
$22. So I think that's about an 80x. That's a lot of growth. That's 8,000% return.
yeah,
So if you catch some of these small cryptocurrencies before they take off, then you're going to be rewarded for finding the gem, the really good crypto that's undervalued at that time.
yeah. And I think Stormex has a lot of potential to be one of those. Like it's made a nice move so far, but it's only moved like 6 or 7 cents at the max.
Okay.
But what I looked at in the Stormax app is it's a cashback rewards program like you have with your credit cards where you get cashback rewards, but it's crypto back
Mm.
rewards. But they have a
Yeah. Yeah.
they have a
Okay.
tier system to where the more Stormex you own, the higher tier you are, and the more crypto cashback you get. So you're
Okay. It makes sense.
incentivized to hold Stormex.
Which is exactly what you
Yeah,
want.
yeah,
That's a good tokenomic.
yeah. That's what I'm saying. So that incentivizing people to hold it, I think, is going to lead to it becoming bigger and bigger because the more people who start using the Stormex app to get that crypto cash back, and they've got a lot of big retailers that they work with. And I think all it would take is Amazon coming in and saying, "Hey, you can now use Stormex for crypto cash back or crypto back, whatever," and we could see Stormex really shoot up. But that one, I think has a lot of potential because it's just set up to where to make you want to hold it.
There's a lot of cryptocurrencies that are really focusing on that now. Like with the staking rewards. I
Mm-hmm.
don't know if did you look into that in the end when we discussed that before?
Yeah,
I think we talked about it last
I've been
time.
looking into it, and I'm staking my Algorand. I think it's staking on Coinbase, or it may just be interest because some of them you just gain interest for holding them in the exchanges, like USD coin and Voyager.
Yeah,
You just get interest. You're not staking the coin. They just want you to hold that coin for some reason, so they're giving more of that coin to you to hold it,
yeah.
which is nice because it actually just went up to 9%. It was 8.5% interest, and now it's up to 9% interest.
Is that on US dollar stable coins, is
Yeah,
it?
the US UC USDC I think is what it is. USD
Ah,
coin.
US dollar
Yeah.
coin. Yes, yes. That's great for people who just want to earn a safe yield,
Hmm.
and not risk too much capital. Of course, there's still risk, if the platform, for example, goes bust and your money's gone. But um, aside from that, there's not as much risk as trading
Hmm.
cryptocurrencies, and I think that's an attractive proposition to people with a lot of capital that don't want as much risk but want to get a better yield than they would in a bank account or a savings account or even with bonds at the moment.
Well,
I
pretty much
think the
everything.
yeah,
And that's
yeah,
why that's
9% is
why I'm
great.
expecting kind of this time if the stock market crashes, I'm expecting people to come into cryptos just for that reason because if like I'm already in USD coin anyway just to get that interest because it's just a nice safe stable investment of 8.5 to
Yeah.
9% interest.
Yeah, I mean it's perfect. It's perfect for that going in and out of cryptocurrency, and also you get a return for just holding it. So it's better than going from, actual dollars or actual euros or pounds into crypto and back
Hmm.
out. So yeah, I think you're absolutely spot on there, and I think a lot of people don't realize yet how easy it is to earn this 9% a year on something like US dollar coin, you
Yeah,
know.
that was one of the first things that I noticed because Voyager app has been my favorite app so far to use, and they have a lot of
Yeah,
different tokens that you can gain interest on. And
nice.
Algorand was actually the first one I noticed on Coinbase, where they were giving 6.5% interest. And so I just kept buying Algorand, and then of course Algorand shot up, so I was getting the interest of the Algorand and the price jump of Algorand, which is amazing. That's amazing profit right there when you're getting both sides of the aisle. Where USD coin, you're not going to get any price jumps, but it's nice and stable. But as far as the staking, though, I'm still a little iffy on it because that risk of losing it because of the staking. Like, what exactly is that risk? Is where the block doesn't, or the transaction is wrong or something?
So with staking, the risk is relatively low. It's normally pretty low risk in terms of what can be done. But I don't know if you've looked into liquidity provision yet. So like you can lock up your tokens and rather than stake them, you can just provide liquidity for something like Uniswap for trades. And there's something called impermanent loss, which I don't know the exact way it happens, but that's a risk that means you lose some funds if something goes wrong with that trade, basically. Another risk with staking and liquidity provision is what happens if the project or the protocol or the application, however you want to define it, what happens if that gets hacked? So let's say it gets hacked, that smart contract that stores your Algorand in to get your staking rewards. What happens if that gets hacked or exploited and funds are drained from that staking pool or that liquidity pool? Well, what happens is that whatever funds are drained, the loss is split between all the people staking or all the people in that pool of liquidity, and then you take a loss. So that's the risk. And obviously, where it's new code, where the applications are new, there's always a risk of pools being drained or liquidity being drained out of pools or exploited. So that's the risk you take. I think with staking, it's quite safe. I think there's not been too many issues. It's generally when you get into this yield farming and liquidity provision, that's when you start having issues with pools and money being drained from the
So
protocols.
basically, you're saying you probably want a company more like Coinbase or Voyager that you're using to stake or gain interest because they're less likely to have those issues in the pooling. Like they're probably less likely to get hacked than say a smaller project.
Yeah, the smaller projects have more chance of getting hacked, definitely, and they have more issues. They have less time that their project's been around for, so there's been less time to test the robustness of the code in the project. Um, I'm not sure, with something like Coinbase staking, yes, it's good. It's good in the sense that you're more secure, but you're still kind of stuck in the sense that you have counterparty risk. Coinbase is fine,
Mm.
but other platforms, how reliable are they? What are they going to be around in a month, in a year? You have the same issue. You don't want to be using smaller exchanges to stake because they have the same risks or a different set of risks, but the same level of
Mm.
risk as the smaller projects just staking through the actual
Yeah,
application.
that's why I like Voyager because they're actually already publicly traded on the U.S. stock market. They're an OTC stock, but they're
Okay,
they're
nice.
uh, staying up on their reporting and all that. And I think here soon they'll probably uplist to the Nasdaq or NYSE. But because they're a public company and regulated, they can't really do any shenanigans or lose people's money because not only do they have
Yeah.
the traders' money that's in the accounts, they also have the shareholders' money who's invested in the company. So they have a lot more on the line than, say, like a private company trying to do a staking pool or anything like that. So that's why I kind of like I like Voyager, and Coinbase is fixing to go IPO as well on the stock market. So that
Yeah, yeah.
that public funding is I think a key to picking your brokers because there is a lot of sketchy brokers in the crypto world. That's for sure.
Yeah, oh, for sure. Yeah, a lot of sketchy projects as well.
Yeah,
So you never know really. You want to know who the team is. You want to know if the code's been audited to make sure there's no bugs. There's lots of things with these smaller projects, and kind of going back to what we were saying about the risks of staking or providing liquidity or yield farming, is you can actually get decentralized insurance now. So you can actually get insurance protocols that people put their money into to earn the insurance. When you pay for insurance, what's it called? You
The deductible, or which one are
The
you talking about?
premium.
The
That's what I
premium,
meant.
yeah,
The
okay.
insurance premium. So, like, you pay an insurance premium to basically say if your money is stolen from a protocol because it's gone wrong or there's been an issue with it, then you'll get the money back from this insurance company. So it works like a normal insurance, except for the money that's paid out is paid out by normal people like you and me because we
Okay.
provide the money and then we just make money on the premiums.
I
So
actually love that. I love that. That is a great investment. I need like I've been looking into the DeFi side of it where you're loaning out cryptos, but insurance is like probably one of the best money schemes that's ever been created.
yeah, I
and
mean, they're profitable,
that's
very
what I'm saying.
profitable.
They are some
Yeah,
of the most profitable companies because you're paying them in case something happens. And if
yeah,
nothing ever happens, well, then that was a big waste of money for you. I mean, you got the safety, the peace of mind.
of
But if
course,
nothing
yeah,
ever happens, well, then the company just got all that money from you for free. They never
yeah.
had to
Oh
pay
yeah,
anything out.
100%.
And the odds of something happening when you've got a million people as clients as an insurance company are pretty low. So you're going to make a lot higher profits and only have to pay out every once in a while.
It's
So
exactly the
actually,
same with this.
that's
You
what I'm
know,
saying. I love that. What's that project called? Because I'm going to get into that.
there's a few different ones. So one of them is called Nexo, or not Nexo, Nexus Mutual. Sorry, so Nexus and then Mutual.
Now, do
That,
these have? Do you have to? Is there gas fees and when you're transferring your coins or
yeah,
whatever for the insurance on this, or?
yeah, you probably have to pay a get transaction fee to deposit your funds on the Nexus mutual contracts, but I haven't used it, so I can't say for definite how the process is. Um, but yeah, Nexus Mutual is the biggest one. Another one is Cover. A smaller one, a newer one is Bridge Mutual. That one's on the Polkadot ecosystem.
I didn't even know that existed yet. Like I knew about the personal loaning of crypto, but actual decentralized insurance companies, like that's amazing. That's a
It's
great
great, yeah,
idea. That's like fantastic. Like that
and
is
it's
something
very
huge.
undervalued at the moment. I think as well. I don't think they've really taken off in terms of their token values as much as they will in the future. I think as the DeFi space gets bigger, there's going to be more and more need for insurance, and that's going to
Mm-hmm.
become more prominent, especially when you see these people with big money coming in. They're going to
Mm-hmm.
want to protect their capital, and they're going to want insurance against the risks of yield farming or of staking, and that's exactly what these projects are going to be able to do.
Back to the staking real quick though. You were saying if it gets
Yeah,
hacked and you possibly the pool gets drained. If the pool doesn't get all the way drained, you would only take a certain percentage loss.
exactly.
Okay.
Yeah. So imagine like me and you have put our money into a staking pool. We put $100 in each, so there's $200 in the pool. If $100 gets drained, then we both take half of that loss each. So it's the same with this. Everyone takes an equal cut of the loss based on how much money they had in the pool.
Okay, so you're not necessarily risking all of your investment, but you could be risking a good portion with
Yes, and
staking.
what you're also risking is when that hack happens or when that exploit happens, the price of the token crashes. Especially if it's a small project. As soon as that token pool is drained, the tokens are sold on the open market firstly, which crashes the price anyway because the
Mm-hmm.
hacker's trying to get their money out. But then also confidence in the token is lost,
Yeah.
in the project. So the crash becomes even worse. And that's why you get a lot of smaller projects that have basically admin keys, which makes them less decentralized, but they're able to freeze the protocol and prevent any tokens being swapped. And in a lot of cases, they'll basically hard fork the protocol to then make a new one where everyone gets their new tokens, and it kind of reverses or rolls back the exploit. So there's
Okay.
ways around it, but it's kind of it's still not great PR, and it's not good for the decentralized aspect either.
Yeah. Well, it'd be the same thing on the stock market. If somebody hacks Facebook, Facebook's shares are going to drop pretty hard because of security breach.
Yeah,
So it's kind of the same premise. It's not
exactly.
it's not really any different than that. So it's not a new concept, I would say. And any investment's going to have risk. You know,
That's
there's not
right.
any investment where you can put your money in and be like, all right, this money is definitely going to be this amount by this time. There's not.
But there's more risk in these DeFi plays. You know,
Mm,
that's the reality, especially the smaller ones, because when you deal with code, and this isn't something that I've thought of myself, this is something I heard on a podcast I watched, and I think it's very true. Like when you deal with something like code, the only way you can prove it's secure, prove that it's robust and not going to fail, is when it's been around a long enough time that it's not had any bugs or any issues that need fixing. So when it comes to trusting a protocol like Bitcoin or a DeFi project like Uniswap, it's all about how long the code's been around for. Because the longer it's been around without any problems, the more people will trust it because the code's been tested for longer. But when the code is new, like with a new project, there's plenty of exploits, sorry, that might not have been discovered yet,
yes.
and that's why it's all about the longevity of the project, and you get more trust, and there's much more risk in the newer
Yeah.
ones.